Good evening. Ira Epstein with your SPDR ETF wrap-up, and this is for Tuesday, the 15th of December. It's hard to believe we're halfway through December 2020, and we're getting on just after 6 p.m. Central Time. Interesting day, markets soaring to the upside in the stock indices as the market's got its fingers crossed that Congress can put together a COVID relief bill that the president will sign and everybody can agree on. I don't know what's included in it. It's been split, as you know, into one bill, a separate bill proposal at least, that would include state aid and monies and lawsuit protection. Another part of the bill is everything else. That's the way to look at it. So one's for about, I think, $160 billion. The other is for about 740, something like that, billion. So the numbers come out to about $909 billion that they're trying to work with. Tomorrow's the FOMC announcement. We get other central banks throughout the week. If you saw today's New York Empire State readings, they're starting to show you the problems that are showing up in that area, and they are starting to mount. I saw Mr. de Blasio, their mayor, say that he's thinking of closing down the city with a full shut-in after Christmas. Mr. de Blasio, the virus won't wait for you. Don't know what to tell you. It's really simple. It's not going to wait for you. This virus is out of control. It's tasking hospitals everywhere. It's just filling them up. It's a different type of virus spread this time. It seems to be quicker. UK is saying it's mutated, and they have named the gene already. They don't know if the vaccine works or doesn't work on it, and they don't know if this mutation spreads faster. They're noticing that they're getting more cases than they had before. Then the good news, because that's the bad of that. The good news is Moderna. The FDA said, yes, safe and effective. That's great. It goes to the next level there now at the FDA and CDC. Once we get that approval, that's a new drug. And the beauty of that drug is you don't have to freeze it. So that's one less element. So the market's looking at all this, trying to figure out what to do. As I look at the biotech, all the market did today is it stepped back, filled in a gap that the chart had, and the picture of the chart, well, it's still bullish. Higher lows, higher highs, just coming off the new high of this whole index. That's not bad action. You're well over the 18-day average of closes, so support, if you were to just drop and pull the rug out, the 134.50 area, 134.60. What you wouldn't want to do on the current chart pattern is take out 130.84 to damage the chart pattern, but that's $16 away, folks. I mean, that's a lot of money from where you're at. As for why the market's stalling, I want you to look at the Bollinger Band. Markets pay attention to Bollinger Bands. I know that some of you are skeptical of it. Go study it and then write something that makes sense to me. But 95% of the time, statistically, this market is going to trade within the black bands. So that's a resistance point in the market. It doesn't mean you can't push the market up higher by locking on the band. I call that term, I named it this year, the Gorilla Glue look. You know why? Gorilla Glue. For those of us that buy a regular glue that we use in our homes now, that's the glue. And it just locks it in, and until it breaks away, it doesn't break away. That's a sign of bullishness. Then you take the slow stochastic reading, and stochastics, unlike regular relative strength or even MACD, they can lock in. And when they lock in, they get a personality. They'll do this. They'll see both numbers that make up the indicator go sideways over 80 for several days or more. And the breaks in the market, you got to close your eyes. There's a way to come in, and it's like this. I laugh. And you're buying the market on the breaks, and every part of you is telling you this is a market that's overbought because you've been trained to think that way, not trained to think it's a buying opportunity. And until that's lost, that's how I view the market, a buying opportunity. When it's lost, and these readings eventually get lost, then I look for a correction from that point. Don't have it. Until it sets in, it hasn't set in. SMH, we have a higher high, lower low pattern. That is not a trend. The market is doing a nice job of staying over the red line, which is the 18-day average of closes, which keeps the bias up in the market, but it is overbought, sort of drifting right here. Then we get to the XLI, the industrial sector, which has had a pattern of lower highs, lower lows. There's a but here. I want you to look what Bollinger Bands were doing and now what they've done. Do you see how narrow they get? When they get that narrow and the 18-day average is right there and you start spinning on it, I call that a pipe. And pipes typically churn the heck out of you because traders come in and they say, oh, I'm going to buy it, it's going to go up. It fails at the upper Bollinger Band. It's going to go down, fails there. Momentum falls all over the place in a very narrow band. You stay away from those. But the longer you keep narrow and trade, the bigger the ultimate move out of the band. This is what I call a short one so far. In the energy sector, I'm still amazed that every piece of news on energy that comes out is bearish. The International Energy Authority today came out, and what did they say? The agency. They said, we're not going to have the demand in 2021 that we think we were going to have. It's going to be shorter. They're measuring COVID, but they revise every quarter what they're doing. But that was the report. It was bearish. This market's really not dropping. You were up 78 cents today in the market. You have a pattern of lower highs, lower lows, but because you're over the 18-day average, the bias is up. So the sell signals are muted. Now, the market did lose an embedded reading, and I'm telling you, more times than not, you will make a run to the 18-day average, a lot of more times than not. And I don't call that the run. So if you were to get over that high, then this is a trap for the bear. So far, I still think this market can be a surprise and break a bit more. In the QQ, and by the way, I'm not bearish because you're over the 18-day average. I'm just looking for setbacks. QQQ, higher high, lower low, churning, overbought. Buy. EFA, the emerging market. This is a very crowded trade. What do I mean by crowded? Everybody wants to own emerging markets that you watch on television or you read their news reports. Everybody wants a piece of that. And of course, China's not an emerging market country. I hope you understand that. They're now developed, so don't call them emerging markets. You can go to the Philippines, Malaysia, Thailand, then you've got South America. There's plenty of emerging markets out there. And the market's got a pattern of a higher high, lower low. I just see churning in this market too. Gold stuck at the 18-day average of closes. Market doesn't want to break down to the 200-day average and doesn't seem to have any mounting real pressure yet to the upside, and it's not a trend. You have a lower and low, higher high. I don't even know why I'm looking at some of these charts. They're just not doing anything. The same in the gold miners. The gold miners had a bounce today to a resistance area that starts at the 18-day average, goes up to the 200, this gray line right through here. So between right here, 35.17, and let's call it 35.81 is the resistance. If prices were to get over 36.03, then I think you've neutralized the bear trend. Until then, I don't think you've done that. TLT, I think the smart money's saying, I'll wait until 1 o'clock, see the FOMC statement, then I'm going to take a lunch break, then I'm going to go to 1:30, watch what the Fed chair says, and at 2:40, 2:30, whenever he's through speaking, they'll start trading again. That's my interpretation. FOMC days, especially ones that could be a bit tricky like tomorrow, traders are very careful. FXE, I am still bullish. I heard people today on TV talking, and respected people, the people I think are good, 130 in the euro this year, 128, 130 range. Market, you can see here, not doing that. We're only in the 122s in the cash, so that's quite a ways off from here. So you put it together, you try to come up with a game plan, and that's what I give you each afternoon. Admittedly, today I don't see a real lot. This is not, by the way, everything I do. I cover about 40 charts at 4 in the afternoon for my subscribers, and we'll cover the short term, the swing, the day-to-day, and the very long term. I didn't cover weekly charts today because I had looked at them. There's just nothing to really bring up. But that on Saturdays, I give you complete weekly charts for 40 charts, giving you the longer term pictures as to what I think you might want to look at. So you get this in videos. They're about 20 minutes long. They don't cost much, $8.95 to get you started. It's that simple. You're committing to nothing. These are some of the markets that I cover. And from there, you decide what to do. Now, if you decide that you want to buy a 1-year subscription between now and, let's say, Thursday, because I know I'm ending this. This is my Cyber Week. I'm ending my special offer. You pay up month up front for a 1 year. That total costs $159, and I will give you the charting course that teaches you how to do all this with all the data, everything in it, access to everything you need to get yourself going. How do you get this for yourself? Just buy the 1 year course of anything. Either my futures, this, my full research, any package you decide. I've raised the price of the course already. It's now $249.95. It's yours for free, and you can start it when you decide, and you can give it as a gift if you decide. We'll work with you on any of that. I'm Ira Epstein. Hope you take advantage of all this, and I will see you tomorrow.